Hey everybody, good afternoon. Welcome to 12 Minute Trading. My name is Doc Severson and I am joined by Dave Lukas over here at 12 Minute Trading. Today's Monday, the 24th of February. Been an odd month. It's been a very choppy couple of months. It seems like every time the market's ready to heal itself and start to trend again, we're dragged right back down. And Dave's got some specs for you and some numbers to help you make sense of all that. But it's been an interesting period. I think, we got past the honeymoon of the election, like, oh, yeah, hey, we're going to be pro business. And then all of a sudden, what happened was we started to get into the realities of change. And the market does not really like to see things change a lot. It takes a long time for the market to get comfortable. So uncertainty is off the charts right now. We are literally 2% away from all-time highs, and we are already into the fear mode of the fear and greed index, which is crazy.
Yeah.
So people are scared to death right now, inches away from all-time highs, and you can feel it in the market. Like everything is overreacting one way
Yeah.
or the other. So eventually this will break this range, and it probably won't happen. It probably will happen fairly soon, but then again, we've been saying that now for weeks, waiting for
Yeah,
the
and we're
break.
still we're still pretty fully charged up on the weekly chart still.
Still
The thing
waiting
just
for
kind
the
of keeps
break,
it
right?
keeps sitting there. So I will say you were talking about this earlier. The I always talk about the Bollinger Bands and that 20 period moving average as kind of that break line to watch. And if we didn't come right down to that today on the S&P and hit it, and then that's where we bounced, you know? So it's, maybe it's algo programming and that sort of thing, or it's, just the kind of that emotional level, but we are very clearly still in that uptrend, right? No matter how this feels, quote unquote, we're very clearly in that uptrend. And so the thing I'm watching is if that level breaks down and we really start to release that energy back the other way. Um, Friday was kind of a fluke thing. There was a headline out of Wuhan that they have discovered another virus that can jump from bats to humans, but that's it. They just have discovered it. It has not jumped from bats to humans. It hasn't done any of that, right? So, that's what really took the markets down on Friday because nobody knows what's going to happen on the weekend. Nothing happened on the weekend. So we get we're barely up right now, at least on the S&P. We, fluttered with, going down pretty significantly all the way up to being up fairly significantly. I think at this point we probably end maybe a little bit higher than where it's at for the day based upon how this is moving. Really holding the 6,000 level is a key, right? It's nice to see. Something that Doc and I were talking about before this too was so I've got the stats. I'll pull it up. That's the numbers he was talking about. So 86% of Fridays, this is from Ryan Dietrich at Carson. 86% of Fridays in 2025 have been red days. 42% of Mondays have been red days. 65% of Tuesdays are positive days, green days. 89, oh, almost 89.6. So basically 90% of Wednesdays have been up days and almost 60% of Thursdays are up days. So you can see like traders are trading in that Tuesday, Wednesday time frame, and then they're like out over the weekend and Monday, and then they're back in, and then they're out. Like that's the pattern right now. So if you are looking at how to trade, and you're trying to pattern that, actually like Fridays and the Mondays, if you want to sell puts, those are like actually good days to sell puts for the week, and then have it run away from you and like get out by Thursday, right? Before the next Friday. Like that's a good way to play that pattern that's happening right now. So that's take what you will, think about, how those stats impact you and your trading, but if those hold, tomorrow should be a positive day. And so on from for through Thursday. And that may happen pretty easily with Nvidia earnings this week. Right now it looks like based on the projections they're going to beat and they're going to guide higher. That should help markets. So we'll see if we break the trend, but that's what we've been seeing.
It's interesting. Dave and I were talking about this before. I am seeing some parallels. Now, I'm not suggesting that this is going to happen. Here's Dave's bounce at the moving average on the weekly chart. But if we go back to 2019, we went through something very similar to this in 2019, where markets were getting ready to move, and then So if you look at this is 2019 into 2020. Markets we got a nasty correction. That was because the Fed got out of sync with the bond market. And so we recovered from there, was into a nice rally here, and then correction. We recover from the correction, right back into a correction. We recovered again, right back into correction. So for literally months now, this is from May through October. So this is the classic sell in May and go away kind of thing. Market kind of went away for several months here, almost 6 months of just straight chop between 3,000 down to 2,800, 200 points of chop before it finally resolved. And this is what we talk about. This is sideways and volatile. This is sideways and volatile character. And this can break in either direction. This can actually break to the downside, as we saw at the beginning of 2022. Now, this is just an outlier. I'm not going to, everybody gets excited about talking about COVID, but that is your classic exogenous risk that comes in out of the left field of the market. This is similar to like a 9/11 was COVID. You get these once every maybe decade or something like that. But to me, right now, what we're going through is very, very similar to what we went through in 2019, where the market just can't seem to get out of its own way. And
what were the real circumstances around that in 2019 until it broke out? Was there anything really going on there?
Yeah, you're gonna love this one. Do you remember the trade wars that we went through with China?
Yeah, that was when the trade wars were happening, right?
Oh, we're having audio problems here again, huh?
Well, it looks like maybe not. Rob says they're both great, so
okay. Yeah, we try to balance it out every time. I try to usually overcompensate Dave a little bit because I'm on the local end of it here. But anyway, so that's kind of what I'm seeing here is we're going through a similar kind of condition right now, although it's actually much less volatile than it was back in 2019 on a percentage basis. On a percentage basis, so.
And to answer your question, John Cap, we've been selling. I've been selling, almost every day of the week. Mostly, a lot of my 50/50 iron condors have been doing those shorter term, just not longer term, taking advantage of, kind of the ranges here. So yeah, we've been taking advantage of it. We just watched when that weekly's fully charged and that thing really goes, you just have a really big trend on tap. And that's why I've just gone shorter term. Those are 10 to 15 days out when I trade those. Because if you get a bigger trend that, and you got a position that's a month out or 6 weeks out or 45 days out, because we do those too, and you get a big trend that goes into it, you're going to get run over. And so I've just shifted to doing it shorter term, and then once it breaks, then I'll just play the one side and follow it. And then I can go longer term and let it run away from it. So hopefully that helps.
So what Jungle Cat is throwing shade in our direction is because we've been in this really since the beginning of the year. We've been in this massive weekly consolidation. And I don't know about you, Dave, but I don't remember the last time that we had energy this high. I mean, we can go back and look at this right now on the weekly.
For that long.
For this high, I mean, it never stays up there for very long. We get it even sniffing into this area and we trend.
Yeah.
So
usually it's maybe a couple weeks and then you release.
So yeah, like we had fairly high energy there, and then we dickered around. This is the beginning of 23, and then it released as well too on this one. And this was the downtrend, obviously. So this is going to be a little bit different. But normally back here, like here's a good example. Back in 21, we sniffed this amount of energy, and this thing is off and running. So this has been a very, this is why we also say that, look, we're just trading based on probabilities. We're trading based on probability. We do not know what the future is. And it's amazing, like how many times, even in the live trading room where I get questions where what amounts to is like, hey, Doc, what's going to happen tomorrow? What's going to happen next week? What's going to happen with the price of this stock? And my answer is always the same. It's like, I don't know. I don't know what's going to happen in the next 5 minutes. And what I found is the more
Yeah.
that I come to grips with that, that I do not know the future, that all we're doing is we're just setting up probabilities. We're using we're using typical patterns for things like this because these patterns are based on human nature that are manifested into the financial markets. And so the end result of what you're seeing right now is a massive amount of indecision. The market doesn't know what to do with an
Right.
administration that is this aggressive. Like, when is the last time we've ever seen anything like this happen in politics?
Yeah.
None that I can remember. And my history goes back a long way. I don't remember anything like this from an incoming administration that is executing on a massive level every day. The market doesn't know how to discount this, doesn't know
Yeah.
what tomorrow brings. Whereas if you go back over the past 4 years or even before that, things happened so slowly, if at all, that the market was pretty much on its own. So it's something to understand, right? So we're always trying to get out there and understand, like, what does the price action really mean? What does it mean in terms of human behavior that's behind it? And right now it's all about indecision.
Well, and you see it too. We get to these points where it looks like we're about to break out. Like, we're real close and then like something comes along and derails it, right? It seems like that's happening every single week. And then people are getting skittish into the end of the week. They don't want to hold up for the weekend. And then you get right back into it again, right?
Yeah.
And Monday, sometimes like a little bit of a hangover from that. And then Tuesday, Wednesday, Thursday, we're up and then back at it again. And that may just stick like that for a little while until there is, some definitive things. Right now, like everybody knows there's tariffs, right? Trump has said tariffs and everything else. But remember, they were supposed to go into effect in Canada and Mexico. We suspended them for a month. They were going to be 25%. Are they going to be 25%? What are they going to be? Right? Now the market's like got to figure that out, right? Now, like this morning, news dropped that the Mexican president's going to talk with Trump and they're going to try to find a solution to something. What is that? Nobody knows. Like, so the market is just in this like whack-a-mole mode of like trying to figure out, like, is it that? Is it this? Is it, I don't know. Well, we'll trade on this. Wait, Wuhan virus, shit. And that's just where the market's at right now, which great for iron condors, just a great market for iron condors. But I'll say this and I'll keep saying it. When this does really go and release, when this weekly chart really does go, either way, it's going to be a very violent, massive move. And so you've got to act quickly if you've got iron condors on, because whichever side you've got is going to, you're going to get out of that. You need to get out of the side it's trending to in a hurry, because it's going to come get you.
Yeah. Range contraction leads to range expansion. We just don't know which way it's going
This
to
is a
go.
massive contraction,
Yeah,
basically.
so whenever you're in sideways and volatile, which is what the character is that we're in right now. So it's just sideways, it's not going anywhere, and it's extremely volatile. So it's just very, very unstable. That will break out one of two ways, obviously. It has to do that. Won't happen usually, won't go on for very much longer. And in fact, this is why we're saying, like, we've never seen one go on for this long, for this duration without getting a move. And so we're trying to like goose every move that we do, every breakout that we're getting from this thing. However, I think there's a good chance that if there is ultimately a move to the upside, what usually kicks that off is some event coming in which shocks the price to the downside. Great example
It
of
could have
that
been
would
Friday.
be great example of that. Actually, there's a better example of that, which is Brexit.
Yeah,
Brexit came out of left field. Nobody anticipated that. It's like every week now we're getting a Brexit level of
right.
risk event coming along.
Yep.
So a downside shock would actually kickstart this market back up to the upside. However, if that downside shock doesn't immediately bounce from there, then that could be signaling the beginning of the next, perhaps the correction. Who knows
Yeah.
if it's going to be more than that.
Yeah, and we can and if you notice, guys, we continue to stay in this range. Like we got new highs on, new highs on the S&P last week, barely just got them, And now we're right back down to where we were a little over a week ago. I mean, it hasn't really gone anywhere. And so it's just that you have to have a stomach for that volatility in this world, right? And that conviction, that's the hard thing to do. And so that's why we watch the energies, because I can have really good conviction that, okay, fine, if that price runs back up, it's going to come back down in the range. We're going to stay in this range until I see that weekly chart really start to release. And then I'm like, okay, the conviction is changing because I am out of whichever side that is and run it up. And I don't typically count a weekly chart really releasing until I'm getting into the lower 50s. Because these things will get up to the 60, 65 level, they'll start to tick down, then they'll go back up. Like you see right now. And until it really starts to roll off and starts to go down into the 50s, and you see a trend go either way with it, you're still kind of in that sideways mode. Yeah, and you can show some examples on the screen of that.
Yeah, so
Don't go
this is
cat.
the
ES no, SPX yes. Yeah. SPX caught up, but you're right. NDX hit new highs. The SPX did hit new highs. Russell is not, right? So Russell is definitely not going with the rest of the market because of rates. So, but it is supercharged on the weekly. It's still at 66.
yeah, it
So,
really depends on what contract is, because like this chart is showing, like a week ago we did hit new highs on the
mhm.
ES, but depending on this chart, it shows that those are go. So to some degree, if you're looking at the ES, you might also be not looking at a continuous contract because there is the cost of carry, which
Yeah.
decays over time. So the SPX over time is going to be a more accurate chart to look at over time. Intraday, I absolutely agree with you that this is why in the trading room we only use the intraday chart to look at the what's happening with the S&P 500. So short term, use the ES. Longer term, use the SPX. That would be my guidance on this one. So let's look at the NDX here. So I mean, this is the frustrating thing because looking at this, looks like we did get a breakout last week of this pattern, and big energy starting to break out, starting to move, and then rug pull again
Yep.
on a Friday. So that is the and what's funny is, mark my words on this, people will not take the next breakout. The next breakout that we see, people will say, "Well, I'm tired of getting burned on this stuff, so I'm going to sit to the sideline. I'm not going to take the next breakout because
And that's when it'll go.
burn after burn after burn after burn." I mean, we saw this happen in the crypto markets for 6 months last year. Every time it tried to break out, pulled back down. Every time it tried to break out, pulled back down. And then eventually the real one comes along, and then everybody's sitting on the sideline. So
Well,
that
I
is,
just love the situation that things are in right now. Again, price is still telling me the trend is to the upside. We're like deep into fear in the markets being a couple percent off highs, right? Like it seems like this market just is never going to go higher, and there's always something going to keep it back and everything else. But it is resilient as heck, when it comes to hitting these levels like 6,000 on the downside and holding it and stuff like that. And uh the markets climb the wall of worry. They always do. If you guys were watching us 6 months ago, one of the things that I was saying, and I'm going to continue to tout this, is I said that 2025, all bets were off. And I was saying that for a number of reasons. Number one, because I knew that our whole GDP was being propped up by $2 trillion in debt, government, deficits that were being spent, right? And I also, and I said multiple times, the challenge is going to be like, how do you balance reducing those deficits and getting rid of them while at the same time boosting the economy to make up for that? Because if you pull that out, whoosh, economy's going into recession, period, right? Markets know this. And so they're watching this. And one of the things that you're seeing too is the bond rates, like the 10-year bond is coming down. Why has the 10-year bond been coming down? It's been coming down because they actually are seeing that, holy crap, we can cut and we are cutting with what's happening with, Elon Musk and that group and Doge. It's a laugh saying that, but they're being very effective. Like I saw a thing today. This is a perfect example. Because they have a Twitter account and they put this out. They found all these like Microsoft Office license, like 17,000 of them and stuff they're being paid for every year, but they're not being used. They're not on anybody's computer. They've never been implemented. So they got rid of them because they don't need them. Like that's real savings, right? And they keep finding that stuff. So bond markets are kind of seeing this going, okay, wow, there actually is a chance that this is going to get lessened and it's not going to continue to be as big a deficits, right? So we're seeing that. That's positive. Markets like that, right? At the same time, we're seeing gold pour back into the United States like crazy. Okay, now people are making a big deal out of this, going, why are we rehoming so much gold? The London volts are out and all that stuff. But a lot of times where you see gold flow in the marketplace is to the stronger economies and countries that are out there. And it's going to move ahead of time of things. So I still think this year is going to be a tough year. I think this is ultimately going to resolve itself higher. Into May, we're going to get sell in May and go away. We're going to get a bounce in the summer, and then we're going to get some nastiness in the fall. And depending on what happens with the tax bill and that sort of thing, because I think it's going to take into the summer and early fall to get all that stuff resolved. After that's when we're going to see if there's going to be a real nasty correction and stuff, that's where we're going to see it. So that's how I think things are going to play out. But the overall trend is looking more positive fiscally for the United States. But it is going to it's going to take some pain. I mean, it's like going on the last thing I'll say, it's like going on a crazy spending spree with your credit cards and everything else and spending to high heaven like nothing matters and you've got all the money in the world and then having to really deal with that, right? If you're really going to deal with it and you're going to fix it and take care of it, well, you're going to have some pain. You're going to have some austerity. You're going to have to not buy the things you want for a while, and all that stuff has to happen. And if that's what's really going to happen here, yeah, it's going to be painful for the economy for a little bit, but I think ultimately the US is in a better position for many, many years to come if that's done right. And if you can balance it with tax cuts and things in the meantime and getting, Apple to build $500 billion worth of spend over the next couple of years here, great. That's awesome. So that's why we're seeing chop right now. The market is like figuring out the line and getting ready to kind of find that last piece of good news to go.
Something I brought up in the fall was we could be seeing a 40-year pattern here. If you guys remember, here was the Reagan rally into the 1980 election, and then what happened after that? Went sideways for months, and then eventually we pulled into a full on bear. So there was a quick little recession. So there was a little bit of pain here, that we had to deal with, during that time of getting everything right. Righting the ship is sometimes getting to be painful, and then you can see what happened after that. Like we took off.
About 18 months.
Right, we took off. So the short-term pain, one step back to take two steps forward. This could be happening in 2025. But I agree with Dave. Is like it's not going to happen when everybody's going to look to the downside. Market will typically move to the opposite direction first, pull everybody in, and then we have problems later on.
You want to see it from euphoria. Like that when you're in the euphoria level, remember markets 4 cycles, right? So it's disgust, disbelief, acceptance, euphoria, right? So disgust, the markets are selling, crashing, it's crazy. Then you have disbelief because the market rallies and nobody thinks it's going to rally, and it does, and it kind of holds the rally. And then you get into acceptance, which is the longest period. And then you get into euphoria, which is that parabolic kind of final tail end, right? And this repeats itself, days, weeks, months, years. And so when I'm looking at this market, I'm just like watching and I'm like, where's the euphoria spike? Right? We had like if you look at zoom out like on a weekly chart and stuff, we haven't gotten the euphoria spike yet. Yeah, we got all-time highs. We haven't had that parabolic just tail that typically drags everybody in and everybody's just, popping champagne corks on CNBC and everything else, and nobody can lose. that's when you got to be ready for it. That's where it comes from.
I was kind of looking for the same thing back at the end of 21. I thought we'd get one last push, and we never did. It melted
That's
down
true.
into the 22 bear. So we've got things in a Darvis box right now. We're looking
Yep.
for either breakouts or breakdowns from the current range of Darvis box. We're trying to keep things as simple as we can. We're trying to keep our own personal bias out of our decisions. And so that's
Make
really
no
all you can
mistake,
do in
guys,
this.
though, at
So
some
yeah,
point with what's going on, we are going to get another 20% correction. Like it is going to happen. If it's going to happen from here, then it happens. But we're going to get one probably within the next 18 months. Reagan got it because they had to jack rates to 18% to crush inflation. If you look at all the inflation metrics, it's all turning back around and going higher, right? So, we'll see what the Fed does, but there is going to be that correction. I'm just looking for kind of that last little bit of euphoria before it happens.
that would get us down to 4,900 at today's prices, which is actually right along a major trend line that goes back to the lows in 2020. So that wouldn't be
Well,
surprising.
yeah, the 20 period moving average on the monthly chart's right at 5,200, and that would be a higher high or a lower high. I mean,
Yeah, and it really doesn't matter to us which way the market's going. It certainly is easier to make money in a quiet and trending market when it's just going higher every day. It is easier because there's more trades that we can play. When markets go non-linear, when they go into corrective, they become a little bit tougher to get in line with because usually the rallies are very, very strong, and fading into one of those rallies is pretty suicidal. So you kind of have to wait for it to fail before you can play the downside on it. But I think we're still quite a ways away from that happening yet. So we'll see. Any other
are there any
questions? We
other?
just got a couple of minutes here left for you
Yeah.
guys for a Monday, and price isn't
Any other
doing much of
questions out
anything
there?
right now.
Mhm.
Just kind of walking sideways. We're back into the opening range, so we did our
Yeah, there we are.
spelunking down here and below the lower expected move, kind of hanging around the anchored VWAP for today.
Yeah, I really do not want to see it go below 6,000 today. I don't want to close below 6,000. So that would be a good sign. We hold 6,000 today, and then the next 3 days we who knows, we're back over 6,100 again.
Yeah, there we go.
NVDA earnings Wednesday. So I keep seeing the whole guy holding the world, and it's like the whole stock market, NVDA underneath, memes everywhere. So I think I saw a couple. I think was it Goldman. Somebody did come. One of the big places came out and said that prediction is for them to exceed earnings and guide higher. So that would be positive for the markets if they do that.
Their actual performance on the last few earnings reports have been kind of spotty. Like
Yeah.
I think they're set up to they've almost set up to the what is it, the incredible weight of massive expectations or
Yeah.
something like that. But it's
Yeah.
pretty spotty
It's
for
got
me.
to be perfect.
Yeah, it's got to be perfect otherwise.
Yeah, if they hit and guidance is off a little bit, they're gonna fall. If they, don't hit and guide higher, they're still gonna fall. Like it's got to be, it's got to beat and got to have higher guidance.
All right. Well, thanks everybody. Thanks for joining us on a Monday. I hope you have a great rest of the month here, and we're going to see you in the next month in March. We'll see if we have a little bit different market to deal with. Thanks everybody. Thanks for joining us. We'll see you next week.
See you then, guys.